All right, hello everyone. This is DayTraderRockStar for a educational review of the 10 for 1,000 watch list for last week. The only reason I called it educational review this week is because I feel like this past 10 for 1,000 watch list we did, it shows why um, the triggers work so well, why the pattern recognition is so important, and it's just is one of the best watch lists that I could review because it has great examples of all different chart patterns and why we want to get in them. So, and a very good watch list last week. Everyone made a lot of money on this. So we're going to start off here with the Abbott Labs. Now, Abbott Labs was probably the only stock that ended up a little bit lower on the watch, from the buy trigger price. And what happens, the watch list goes out on Sundays, and usually Mondays, if we see that breakout and stuff, a lot of triggers will get in here. Monday, this one actually did trigger. There was a 4-day consolidation. I had a trigger here at 52.50 and a target of 53.30. Now, it went up to 53.04. Or, actually, let me see what it went up to. Actually, 53.25. 53.25 it went up to. So it did trigger. It was up to 53.25. It was up 75 cents, but never got up to that 53.30, which was the target. And again, it was 10 cents away from the target, basically, right around that 50 period moving average. And then the next couple of days, it backed off and fell back. In reality, yeah, this pattern breakout worked well. It was off of a channel, it's called a high probability setup with the 200 period moving average and lower trend line underneath us. And what's really good about this now is we're going to start really focusing on the other criteria to get your entries in on these things. So once you establish the pattern and a high probability setup, then your next task is actually to find your real tight entry points so you can actually get the best return on your money. So that 4-day consolidation was that trigger for me. So it was holding the 200. It was a nice 4-day consolidation. That trigger happened. Got a nice little move, 75-cent move. And then after that, of course, whatever came out on that caused it to drop off there. But just a great setup either way. So we're going to continue on that. Now we're going to go to the next one. AES. Now, AES is another great chart here. I mean, it's just a great example of a wedge pattern. This is a classic wedge pattern, a very bullish chart pattern. And again, you can see how a wedge is formed, hitting down. And again, the object here is to get into a trade, swing trade or short-term trade. At the pullback where you're going to get the final break of a pattern, so you get the biggest return for the less amount of time being invested in it. So down here, there's always a downtrend, so it's hard to really gauge going long here. I mean, there's these little points. You could always trade the market, but this area right down here is going to give you that real nice entry, and then you really don't have much to worry about because you have a nice return there. And the pattern here shows you. So a wedge pattern. If you take a wedge pattern and say one of the basic rules of wedge patterns is, most wedge patterns you want to see break out at about, I'd say 60 to 75% into the pattern. More towards the 70 to 75% of the pattern has to be completed, and then look for that breakout. Now there's other real great tricks of the trade, and I'll save those for another video. But the width of the wedge pattern here is a good indication of what we call the measured move target. And if you actually take the measured move target from the breakout, you'll end up finding that usually that measured move starts right back up towards that pattern. So there's a good way of actually timing a breakout. If you understand, you take the width of the thing, you bring it down here. Actually, even before the breakout happens, what you want to do is actually just even before the breakout happens, you're going to put that into a point where you're just going to look here and say, all right, if I put this measured move area, the width of this wedge pattern in here, and I just want it to come back up to the top of the pattern, I'll put it down here. You can see this is where it's going to happen, right down here, and then that's where you're going to watch for your breakout, and that's exactly what happened at that point. Now, this had a classic push, fast push out of this pattern, first retracement. And that's where your second entry is going to be, and then off to the races. So that's AES. Very good setup there also. AET, Aetna. Aetna off the 200 period moving average, probably going to be on this week's watch list. The whole HMOs and health insurance stocks were set up last week. This one didn't really, take off from this level. It's still holding the 200 though. AGU is the ag stock. This actually had a nice little reversal candlestick, a nice little move up here. And actually, the ag stocks are going to be one of the highest focused points of my watch list this week too. So this is actually still in play, and I'd actually probably review this again on tonight's watch list. The BLK, BlackRock, great example of a wedge pattern, and this is a classic example of a W or a pushback down. Your first retracement back up to the 20, and your little pullback. It doesn't go back to the recent lows. It holds off of that. I usually look for a 50% retracement from that bottom line, that bottom trend line push up to the 50. Look for that halfway retracement, and that's going to be your entry. And then from there, it's off to the races. That's usually a good sign of a wedge pattern just about ready to break out. So, again, this is another good example of how to time a wedge pattern. Finding these little setups here really kind of give you that entry clue. And again, I can go more into this in another video too. It was BLK. CHNG here. Again, nice inverted head and shoulders pattern. Trigger is 42.62, and again, you can see the trigger here. It's continued to be in play, so it actually looks pretty good still. CI. Sigma. This is another health insurance stock. The stochastics have pulled back here. This is going to be on a focus list this week also. We're back at support. This was a early week move here. We actually had a nice move here on this one. It went up to 36.04. The trigger was 35.20, so we got 84 cents on that. I put I wanted to see it go a little bit further higher. Didn't turn back, but now it actually looks really set up because the stochastics now are set up. CNX, another great example of how you use trend lines. What was once resistance, a W pattern broke out, came back, retested that lower trend line, and also had the 200 period moving average right underneath us. So this is a great example of a high probability area right there. Stochastics were also set up perfectly, had a nice run, but then we came back down and retested again. Stochastics, same exact thing. We got a nice little push, and then retest again, pulled back here. Stochastics crossing back up, and it looks very good now too. So a very good chart pattern there to work with. DRIV we'll leave DRIV here. Again, this is just a consolidation breakout. You see a nice consolidation here, very tight range. Its price is staying above the 20 period moving average. The easy trigger here would be the breakout of the highs, and it's still continuing to look good here. So I'm going to stop this video, just pick it up with part 2 next. I want to send out part 2 video next, so let me just get this out for you.